opportunity to be able to share the vision that God has placed in their hearts. In addition to that, we're going to be bringing in professional individuals like we have today to help business owners grow your business. No matter what your need is, we're going to be able to help and assist you in taking your business to the next level. But before we get started, let me start with a scripture. We find here in Psalms 35 and 27 and Galatians 3 and 14. The Lord has pleasure in the prosperity of his servants, and Abraham's blessings are mine. Letting us know not only does God has a pleasure in he's concerned about our spiritual, he's also concerned about our natural. And that brings me to our guest today. We have a very special guest today. He was able to speak at our event last weekend, and they were so impressed about him and what he had to say. I said, I have to ask him, will you please come on my show Monday so you can share again the information that you had given us on Monday for today. For those that was not able to be there, now you get another chance to be able to hear them. And for those that was not able to be there, they can go back and pick this message up a little later. I have with me today none other than Michael Elliott. He's a CPA, an MPA, Capital Assets Fund Program Manager. I would like Michael to say hello and tell you a little bit about what he does.
Well, hello. Well, thank you very much, Larry, for inviting me to this radio broadcast. I get a lot of people saying, hey, Michael, you should be on radio, so I can check that off on my bucket list. So I appreciate you inviting me. So basically, what I do is I manage a program. I work for a National Development Council. It's a national nonprofit that seeks to help increase the flow of capital into underserved areas, specifically urban communities and rural communities. Founded in 1969, we've been around for 50 years. The goal, again, for what I do is basically help minority businesses gain access to capital. So at NDC, seeing that there's definitely an opportunity where minorities aren't getting access to capital compared to our majority counterparts, we sought to develop a program that basically help minority businesses gain access to capital. So the program's been around since 2016. It's through a partnership with Morgan Stanley, a partnership with the local urban league, the National Urban League, as well as Cleveland and Cuyahoga County. So program has been very successful. I'm very proud to be responsible in managing the program. It's been so successful that we extended the program in Broward County, Florida, and Jacksonville, Florida as well, too. So it's been great.
Well, that's fantastic. So let's dig right in here, Michael, because I want to ask a couple quick questions here. First off, when should a business consider applying for a small business loan?
Great question. Great question. So one of the obvious points is typically startup businesses. If you're a startup business, typically you don't have enough capital to actually get started. So you may have some savings on the side. You may have access some grants maybe from a municipality. But typically you need to leverage your money with some type of larger pool of money so that you can get the business started. So if you're starting a business and you don't have the capital in hand, typically most people go to a bank for their particular needs. Another avenue is if you are an existing business looking to grow. Now, I usually say within any kind of workshops I conduct with small businesses is that your cash is king in most parts, meaning it's the lifeblood of your company. And typically you do not want to outlay a large portion of your cash that you need to pay your bills, pay employees. So typically you want to, as an existing company, find ways to leverage other people's money, as they say. And in this case, if you're looking to expand, meaning that you're looking to buy equipment, or if you're looking to purchase real estate, again, those can be some very large ticket items that you do not want to outlay a lot of your cash. So typically they'll come to a bank for those. Lastly, if you are having cash flow issues, so there's a lot of businesses, existing businesses, that may have an issue where they can't pay their employees. And I find this a lot with businesses that typically work in the government or have clients in the government where, you know, your receivables may not be or basically what I mean by receivables is that money that you are owed for the services that you render to a vendor. You may not get paid until like 60 or 90 days. So that may be tough on a small business.
Yes.
If you're waiting to get paid and it takes 60 to 90 days, typically you need something to fill in the gap. Typically you'll come to a lender in those particular cases as well too.
Well, that's great, Michael. Now, one of the questions I've always wondered too was, you know, we hear about getting the loans and preparing for the loans, but how do I determine how much money do I need?
Oh, well, great question as well. So typically one of the big questions that we ask businesses is, hey, what is your cash flow looking like? How much revenues are you bringing in? How much, after you pay for your expenses, how much is left over to able to pay for existing debt service? So I typically ask, hey, business owner, provide me an existing debt schedule. I want to know what existing loans or line of credits do you currently have right now. And based on whatever you have left after paying your expenses, I'm going to be start to subtract out. So I know that you have a loan with XYZ banks. And then whatever is left, that is typically how much, or what we use to determine if you can actually afford another loan. So your cash flow must be greater than your debt service or what you're paying out to other lenders. So when you're evaluating your need for capital, you always want to ask the question, can I afford it? Do I need it? Do I have the capacity to do so whenever you're doing looking to apply for a loan? That's going to be the first question we're going to ask and evaluate. Do you have enough money coming in order to pay your existing and new debt service for your loan?
Okay. So as a business owner, and I'm considering, you know, applying for a loan, you know, what should I be doing right now in preparation for that?
Okay. Right now, first thing is credit. Check your credit. Your credit is pretty much the key to unlock your door to actually getting access to capital. So one of the big things I'm always asking my business owners, the business owners that I'm working with, is, hey, when was the last time you checked your credit? A lot of folks don't check their credit on an annual basis, and I think you already know, most businesses should know, you get access to your credit reports at least once a year.
Yes.
So you can run that. I typically, when I'm doing presentations, I'm like, do it now. Like after this presentation I'm doing, begin running your credit. So you want to look for things like if there's any errors, you want to contact those banks and say, hey, you know, I see that I was actually paying on time as agreed. That's an issue there. You want to make sure that you square away any issues that are negative or have a negative impact on your credit report. So that's the first thing. Then you want to start compiling documents. You want to start getting your business financials, tax returns. These are the basic things that most business lenders are going to start looking for. Begin compiling those right now. I do come across businesses, for whatever reason, are not filing their taxes or filing their taxes on time. Get those squared away right now. Don't wait. Begin filing taxes right away, both your personal and your business. You also want to get financial statements in order as well, too. This is where a lot of the hiccup is when it comes to business owners. They usually don't have an accountant or a bookkeeper. And when we ask for typically interim business financials, they struggle getting those to us. And if they do get it to us, they're typically something's wrong with them, that either they don't balance correctly, or you stated that you have this much cash when you in fact do not. So begin working with an accountant or some type of professional bookkeeper at the minimum, who's going to compile all your receipts, all your invoices, put in some type of understandable format, typically your balance sheet and your profit loss statement, and file that somewhere. Because I typically I like to tell businesses, get ready, at least get ready. You may not need the capital right now, but at least have those things in order so that when a lender does ask for those documents, that you're able to get them right away. That's pretty impressive when we're able to get documents right away. Then you want to make sure you begin developing a plan of action. A lot of folks come to me and they want a loan, but when I start asking the questions why, they can never quite give me a clear explanation as far as what I need the loan for. They have some vague idea or some thoughts. I encourage business owners, start thinking about, why exactly do you need the loan? Is it for equipment? Is it for working capital? Is it to purchase real estate? Is it to refinance existing debt? Put that plan together. So that could mean updating your business plan and tweak it to address whatever the new project is. Or if you're not savvy and don't have a business plan together, I would strongly recommend at least putting together a very thorough executive summary that outlines, hey, This is the reason why I need this loan. This is how it's going to help me grow. And this is what I'm looking forward as interest rates. Just explaining why you need the loan is going to be important. And then building a relationship with a lender. So one of the things that in the work that I do is I'm very relationship driven kind of lending. So typically with larger lenders, you may meet with a business development officer when you walk in the branch, but typically they basically send your application to somebody else.
Okay.
When you work with CDFIs like I am, community development financial institutions, you're typically going to work with the person that's going to do the underwriting for you. So it's very relationship based. Okay. I encourage anyone looking for a loan to begin developing those relationships with a business banker or business lender so that they basically get to know you. I always encourage folks to start off with their lender that they have their deposits with, so that they can begin building that relationship. But from there, with me coming online on air right now or doing your research, begin building your relationship with lenders that you're looking to hopefully court for a small business loan.
Now, when you say putting together your documents and getting everything in order, how far back are we talking? Are we talking just last year's taxes, or 2 years taxes? How far back are you going to be evaluating the business? And the second question to that is, how old the business has an effect on that as well?
Great question. So typically most lenders want to go back 3 years. And the reason why they go back 3 years is we want to start seeing some trends, or we want to start seeing like some momentum that you've caused or you're creating in your business. Just getting like prior year financials really doesn't paint the most accurate picture of your business. So we usually go back 3 years. We want to see the ups and downs. We want to be able to ask you questions about, what happened in 2017 that caused your revenues to rise or your expenses to be cut. So it just provides us more information to draw from regarding your need for capital. Because that's going to really, when it comes down to it, you want to make sure that you give your lender as much information for them to be as comfortable with your particular loan request as possible. So going back 3 years, which is typically the max, is going to provide us a nice amount of information to draw some very good conclusions about how stable you are as a business as well.
What about the credit? Does that when you look at the credit, that's more current, more so than the years, or do they?
Correct.
Do they go back and say, well, your credit was here, but now you're here? Does that have an effect on the loan as well?
So your credit report is built into your credit report is pretty much almost up to 7 years of credit history that we can go off. So based on the snapshot for right now, as far as your credit score, that credit scores can be affected things like how well you make payments on time. Have you had any bankruptcies? Have you had any charge-offs? It goes back sometimes 5 to 7 years. And some lenders, depending on who you talk to, may want to know information, especially about bankruptcy, that can go back 10 years. Even though it may have dropped off,
okay,
they may want to ask that question, have you ever
yes,
had any bankruptcy? Because to many lenders, it's just something about character. We want to know the reason why you got in that particular situation, which a lot of people do. But we also want to know, how did you get out of it, or what's changed as a result? For many lenders, that is a no, but there's also other lenders that will see a bankruptcy and want to just ask more questions, but it's not a straight up denial.
So a bankruptcy doesn't completely eliminate you out of the process?
Not for some lenders. Some, yes. Not for most, but some, yes. So if you're talking about the larger banks, if you don't have that perfect credit score of at least 700, typically they may not talk to you. Okay. But if you are in a situation where you are working with like a CDFI or a micro lender, who for the most part work with businesses that don't have the perfect credit, that bankruptcy will not be an automatic turnoff, but we do want to know the reason why and what are you doing differently.
Now we talked about, you had said the different types of loans. Can you kind of go into the different types of loans that's available for small businesses?
Well, the first loan, which is not really a loan, is actually your own equity. So I'm always going to encourage a business owner, save money up first. So those profits that you get, Many people like to pay themselves with those profits, called a distribution. Others, and which I strongly encourage, I want more people to start reinvesting their profits back into their business. That's a good thing. We track that on their balance sheet as retained earnings. So what I'm encouraging as far as business owners to do is first, think about how can I first invest business money into my own business before you actually seek out a loan. Okay. When you do need a loan, there's a couple loan products or type of loans that you want to look at. You want to look at term loans. Mm-hmm. Term loans are basically saying, hey, Mr. Business Owner, you need $100,000 to pay for equipment, for example. You want to use the money to or do real estate, and we say we'll give you the money, but basically you got to pay that over a certain amount of time. Not only do you pay back the principal, you also pay back the interest. Now that's a typical loan structure for most folks. The other type of financing available is a line of credits. Think of them as your credit cards. Banking business line of credit would basically say, hey, we'll give you a line of $100,000, for example, and it's revolving. So as you make purchases on there, the expectation is that you're paying it right back down. Now, what I find a lot is that people use the incorrect use for the source, meaning that they put large purchases on their line of credit when it should be the other way around. If you have a line of credit that you're choosing to use, you typically want to use it for very short-term needs like paying payroll or purchasing inventory. You want to use your line of credit for that, but you don't use your line of credit for things like purchasing $50,000 worth of equipment. Typically, you want to put those in a term loan so you can stretch those payments out and include it in your debt service.
That's good. Mm-hmm. Now, when they come to you and ask you about a loan, do you recommend what vehicle they use, or is it a criteria of the loan, or is it totally up to the person that's taking out the loan?
You know what? Depending on what lender you go to. So, for example, if you go to a traditional bank, they may have different type of products you can use. So they can use the term loans, or they can use a line of credit. But for many CDFIs, like ourselves, we just focus on term loans. So it really depends on, and that's why it's important for you to do your research and not just go think that one lender is end all be all. You definitely want to do your research, find out what's out there in the market available to you as a lender. But typically, we as a business, whether it's a CDFI or a traditional bank, we're just going to ask you a lot of questions up front, just trying to get a better understanding of how your business works and what are your business needs. And after underwriting loans, depending on if you have those two products available, we may recommend a particular product based on the type of need. So for example, if you are looking for a loan, if you came in thinking that you need a loan, after evaluating your business need, a business banker may say, hey, you might be better fit for a line of credit. So it's really just being very frank with your business officer or loan officer, letting them know what your needs are, and a good one will definitely make sure that they're recommending the right product for you.
So what would be the advantage of having, say, a bank line or using a credit card?
Well, you want to consider, so a lot of businesses, especially new ones, one of the careful things that you have to consider is that when you're starting a business, you typically don't have that business necessarily like a business credit card. You're usually using your own personal name on it. So my advice for a new business, a startup business, or a business maybe been around for less than 3 years, be very careful on what kind of products you're using because everything's tied to you personally. So if you're using credit cards, make sure you're just being very careful on how you're using it and really using it in a way that's going to help grow your business and not use it as a way to just kind of taking care of your own personal needs. It's just being very careful about, it's just one of my word of cautions to new businesses, just being very careful about how you are using debt as far as helping you finance your loan product or your loan.
Now, would it be wise, in a sense of speaking, if I'm a new business owner and I have, say, $1,000, and I take that $1,000 and get a credit card in my business name, Would that be a wise decision in order to help me build my credit for my business, or what would you recommend?
You know what? That's a good question. It really depends on what your ultimate goal is. If it is growing your business, then you are actually, how I would view it, is that you're putting money into your business, or you're getting that skin in the game. So I would look at that as very positive. If you do want to take your $1,000 and kind of use it as a line of credit, or putting what we call equity in your business, then I would recommend that if you want to kind of growing your business and kind of separating the two, I would definitely recommend start putting money into your business, start making moves to actually separate your personal life from your business life. And I as a program manager, I would probably recommend just taking that money, putting it into your business, and start that momentum up.
That's fantastic. Now, what about the types of lenders? You hear all different types of lenders, and everybody. A lot of people say they have money, but there's all different types of lenders. Can you kind of tell us about the different types of lenders and the strings that come attached to those lenders?
Definitely. So the first lender I typically encourage banks to do is, if you have a deposit account with, let's say, a larger institution, you go there first. Typically, your traditional banks are going to have the lower interest rates, which means that that's the money, that's the additional money that you're paying for it. Basically, it's the price of getting a loan. So you want to go to your traditional banks first, begin building those relationships with them. Typically, the strings attached is typically larger banks are looking for very low risk kind of businesses. When you think about the nature of a lender, a larger institution or a conventional lender, they're basically using your money that you put in your bank account to lend to other folks.
Okay.
And so they're going to be very conservative by nature. Now, if that doesn't work, as I tell everybody, you always want to shop around. And so the next type of lender you may want to consider is the type of lending that we do is CDFI type lending. These lenders are typically more flexible in their underwriting criteria. Typically, they get their money from other sources, like a larger institution or foundation, in order to provide lending capital to a targeted market of business owners. These particular lenders typically have those longer terms, meaning that they'll stretch out for more than like 5 years for certain type of uses. They may have flexible rates, so the rates may not be as low as a traditional bank, but they're not predatory in nature. And typically they may not require a lot down. So a lot of conventional lenders may require you to put 10% or 25%. You may find with many CDFI type of lenders, those are the lenders that may not require you to put anything down unless it's kind of a real estate deal. So that's the second lender. And then the last would be more of your online lenders. Now, you want to be careful with the online lenders, especially when I talk to small businesses. What happens usually is they're in a tight situation and need the money very quickly. And what I encourage them to do before you do that is look at the fine print. Many of these online lenders or predatory online lenders, let me just preface, because there's not all online lenders are bad, and typically the market is actually going more online anyway. So I don't want to paint all online lenders with a broad brush, but you want to make sure that if they're asking you very little questions, and if you are only being asked to just provide your credit score and really no financial information, and if they're promising you it'll be in your account within like 24 hours, just be careful. Read the fine print. Every lender is required to submit or provide to you an understanding of what the terms are of their loan, including interest rate. And just make sure you have a clear understanding going in. A lot of folks find out when it's too late that many lenders of that predatory nature take money out of your account every day. They charge crazy amounts of fees, which makes the interest rate like around 100 or 300 some percent. So it's crazy.
300%?
You have to be very careful, because when you tack on, so it's not just the interest rate, it's also you want to look at the fees that lenders are charging as well too. And that's being calculated in these very high interest rates as well too. So, conventional CDFIs and online lender are typically the three areas. Government institutions are also available to do a lot of economic development type lending. So when I used to work for the city of Cleveland, Department of Economic Development, we provided grants and term loans to businesses looking to grow and expand within the city of Cleveland. So do your research, ask questions. I like to say, and I actually read an article that I believe that everybody's bankable, but it may just take some time for you to get to that.
Well, that's good to hear. That's very good to hear. Now, where can small business owners go to help them prepare like now?
Okay.
Where would be some good resources for you can say you need to go to these places and they can kind of start on this process?
Small business development centers are usually the first places I'm telling businesses to go to. These are places typically supported by the U.S. Small Business Administration, where they receive funding from SBA to provide technical assistance, pre-loan counseling, and resources to small businesses looking to either get capital, grow your business. So those are the first places I typically go. We have 3 here in Cuyahoga County. We have the Urban League of Greater Cleveland. We have the Hispanic Business Center, and I believe there's a location in Cleveland Heights, in the Cleveland Heights library as well too. So that's the first place. And then you also want to maybe take a look at Cleveland SCORE. Those are places that provide mentorship. That's something that I do typically ask business owners when they're applying. It's a random question, but I usually ask, so what kind of mentors, or who do you look up to, or who's on your team that's providing you guidance or insight regarding how to start or expand your business? So check out a Cleveland or wherever area you're in, a SCORE chapter, because they can provide you with some additional resources as well too.
Now, can you just take a moment there and kind of go into a little bit about SCORE? Because I think this is an area that businesses can really take advantage of, a lot of resources there and a lot of knowledge. Can you go into a little bit about SCORE for a business owner?
Yeah, so from what information that I know about the program is that basically it's a group of individuals who come together typically at a local chapter, and where if a business needs special help in, let's say, marketing, they may have a volunteer on staff who has past experience in marketing, provide some type of service for you as well too. They may also have, if you need somebody who help you develop a business plan or give you a second eye on your existing business plan, it could be a great place to kind of get that executive eye on your particular, what you're looking to request or develop as far as your business is concerned.
Yes, because that's been my experience with SCORE, is that they're a group of retired executives that has been there, done that,
Yes.
and they are actually sitting down with you to share their wealth of knowledge,
Yes.
about some of their experiences and the things that they've had to do, which I think is excellent for a small business owner, particularly
Yes, it
if
is.
someone is starting out. So now I understand that not only can they get that information, but it also looks good to the lender when they go to the lender. If I'm hearing you correctly, it looks good to the lender when they go to the lender and say, I've been counseled by, a SCORE.
You want to definitely show to a lender, specifically a CDFI lender, that, hey, I've been taking the steps to make sure I'm as safe of a risk as possible. And when you're looking at a business plan, if I could just talk briefly about that, one of the things I'm looking at in a business plan is what kind your management. Who do you have on your team that's helping you do the best you possibly can for your business. So SCORE is definitely an opportunity that I would definitely encourage many small businesses to utilize those services because they get that executive view on their business development.
And you say the business plans is quite important then.
I would say for me it's very important. I want to make sure that you thought through your business and how you're looking to grow revenue, how you're looking to market. That's important to me.
Okay. Now, before we go, I want to say this. How long does this process usually take? When I come in, I'm saying, Michael, this is what I want. This is my paperwork. How long does it take me from the start of the process to the end of the process?
Well, depending on the amount of the request, depending on what type of a request it is. So, for example, a refinance of your loan maybe take a lot shorter time than a real estate purchase, for example. But typically for CDFI type of lending, you can expect at least up to 60 days for the entire process. Depending on how quickly you can get stuff back to us, really affects how fast we can get the money over to you. But you can say around 30 to 60 days.
That's excellent. Well, Michael, I want to say thank you very much. I appreciate
Thank you.
You coming
Appreciate
in.
you
And I
inviting
just
me.
want to say to our viewers, this is what it's all about. We're going to bring you the information that you need to take your business to the next level. What that may be, I don't know. You know. But I do know this. We're going to be bringing you individuals every week to help you take that business to the next level. If you need to contact me, you can reach me at area code 330-388-1955. Once again, 330-388-1955. Or you can get me online at ROBERS32